We're back with you. We're taking a look here at our grain and livestock market activity. I wanted to take a look at our lumber market here. We were talking about the soybean market going down about 50 cents or so. Check out the lumber market today. It is not immune from this washout today at all. Limit down on July and September futures, $15 lower, and we have the July contract now priced at $528.60. Remember, it had been up there, I believe, at $639 about a month ago. We're now at $528.20. So big sell-off in the lumber as well. Now let's take a look at what's going on in the grain trade. Get you updated here. We had a bit of a rebound, a minor rebound about an hour ago, and then it sold off again on the soybeans after that. Corn is kind of bouncing a little bit. We have July corn now down 6 3/4 at 349 1/4, and we have December down 6 3/4 at 370 1/2. Meanwhile, you look at the soybean trade. Here is a look at your last trade. We have July down 43 1/4 at 865 1/4, and that is actually off of its earlier low now by 23 cents, believe it or not. Let's take a look at November. It's down 42 3/4 at 888 3/4. So that is 24 cents off of its earlier low, even though it's down 42 cents. So we had just huge swings in the market so far today. On the wheat trade, let's bring in Chicago wheat. July down 13 3/4 at 476 1/4 per bushel. On the Kansas City wheat, here you go with July down 19 3/4 at 479 3/4. Minneapolis wheat, we have July down 16 1/2 at 547 1/4. And on the cotton trade today, we have July down 341 at 83.91 cents per pound. October limit down 4 cents lower, and December is back to trading. It had been limit down. We're now down 378 points at 83.99. With that being said, let's bring in Brian Hoops of Midwest Market Solutions in Springfield, Missouri, and get his thoughts on today's trade. I am sure that your phone has probably been ringing off the hook today, wondering what is going on. So what do you tell producers when they call in?
Well, you know, this market here has seen a big drop in prices, and you can see that we've tried to come back off of our lows. A lot of what is happening is fund liquidation. They continue to hold long positions and are getting out of them, and you can see when the market drops sharply, a 5 to 10 cent drop on really just no news, that a lot of sell stops being ran in here. And so what the market is trying to anticipate is, when will we reach an agreement with China? It's going to be a timing issue. You know, of course, we're going to reach an agreement at some point. The question is, from what price level will we be at? And the market's trying to anticipate that. And so you'll see a big washout in prices with a higher type close. That'll be a pretty strong indication. I don't know that we're going to do that today, but certainly signs are pointing of a massive amount of liquidation amid heavy volumes so far in today's trade.
Well, hold that thought, Brian. I want to bring you back here after a short break and then get your thoughts on the livestock trade. It's also lower today, and folks are wondering why that's the case with the grain trade lower. So we'll talk about that when we come back in just a moment. Well, let's take a look at our livestock trade now with Brian Hoops of Midwest Market Solutions. And we have the sharp sell-off going on in the grain trade. Are the livestock markets taking advantage of that, or are they using that anyway as a basis for rebound? Sometimes that will directly impact the feeder cattle trade. Let's take a look here, Brian. Let's go to live cattle, and then we'll get to the feeders in just a second. Right now on live cattle trade on the futures, here we have the nearby contract, which would be your June, down 32 cents. We have your August contract down 53 at 104.65 per hundredweight. We have October down 48 at 107.10. Now they are lower by roughly half a dollar or so, give or take a dime, but it is off of its earlier low this morning by quite a bit, about $1.30 off of that. Now on the feeder cattle trade, here you go with a look at August, which is down 42 at 148.55. And we have September 22 lower at 148.90. Now that one is about $1.65 off its earlier low this morning. So quite a turnaround taking place here in the cattle market, at least up to this point here, Brian, even though we're still a little lower on the day.
Yeah, you know, the show list numbers that came out yesterday suggest bigger numbers of cattle coming at us, and this is a time frame where we start to see demand weaken as we go past the peak demand period for the summer months. So right now you can kind of combine that with the expectations that cash will be a little softer next week or even later this week. We were softer last week, and now we should see the market continue to weaken a little bit. The silver lining, as we were talking off air, input costs for producers are a little bit cheaper. They can buy corn, they can buy meal at cheaper money, and that may lead to heavier weights down the road. But for the near term, it's kind of a blessing that producers can step in and forward coverage themselves in case there is, some sort of a weather phenomenon or an agreement reached with China that would send prices back higher.
It's going to be really hot. Tim Ross has been talking about the temperatures above 100 degrees again in the southern plains later this week. Would that be supportive overall here to the livestock trade?
Oh, I think it should be. It should be supportive to prices. When you have that much heat and temperatures, usually your weights tend to drop off. The cattle don't eat as much, so you will have less tonnage coming to the marketplace. You could even have some death loss, and that means you have less head coming to the market. So usually that is a positive factor. Producers want to move the cattle prior to that heat coming in there. Packers want to get their cattle bought as well.
Okay, well, I appreciate the time, Brian. Good to visit with you as always. Brian Hoops happens to be with Midwest Market Solutions. He is based in Springfield, Missouri.